Hey, welcome to the Closing Beat, everybody. Happy Friday. How we doing today? Hope everything's going well for you. This is our stock market update show. Just a real quick show that we do for you guys to let you know how the markets did for the day. And on Fridays, we usually kind of like talk about the week and how things look. We're financial advisors here at Jazz Wealth Managers. And so we just like to update you, good, bad, ugly, let you know how things go. If you want to play along with us, we got a game going on. We have a winner to announce today. Every Friday, we've got a winner for this game we're doing here over the summer called Guess the Dow. No strings attached. You just go to that website there, bottom right-hand corner of your screen. Pick a guess. We won't mark it to you. We won't do any sort of spam or sell your email or anything. Just a fun game. And if you're the closest without going over for the price of the Dow, we'll send you $100. And so last week we had a winner. Wasn't a customer. This week our winner is Robert L. He is not a customer either. So he guessed $26,678.24. So Robert, congratulations. We'll be sending you out a $100 gift card. The email should be coming out to you any moment now to let you know that you won. We'll get your address and send you on the way. If you want to play, just like I said, no strings attached, no purchase necessary, so to speak. We're just playing a game, having a good time there. We had our class last night. If you're one of our customers, you can go in the dojo, watch that thing, the replay. We talked about investing for other things besides retirement. How would you go about it? Gave you some good tips and some good sort of funds that you can look at to help you with that if you choose to invest for other goals besides retirement. So that's available to you. And just a little marketing there. If you're not one of our customers, every week we do a class just to teach our customers something new, or we update you on the markets and the portfolios here at Jazz. We manage our own portfolios, so they're all listed right on the website there. And we like to keep people updated so that you know what's going on, rather than have to, kind of dig in there, figure it out. We like to teach you and let you know. So anyways, let's take a look at the markets. They finished a little bit in the red today. They did the exact same thing they did last Friday, where everything was sort of okay. And then right at the end of the day, the last 3 minutes of the day, a little selling pressure into the weekend. And I don't blame people for wanting to take a little profit into this weekend. You had a great month so far. The markets hit new all-time highs. And we've got a sort of unpredictable week next week, right, with the G20 meetings. Supposedly, everybody's just going to be looking at President Trump and Xi to see what goes on there. And so with that in the Fed, the inverted yield curve, all the stuff we're going to cover today, it just probably let people say, you know what, if I'm a short-term trader and I've got a profit, everybody in the market has a profit. If you're long, I can't blame them for saying, let me take a little profit off the table there. So let's go over the charts and take a look, see what's going on here. You got the S&P lower by just over 0.5%. Totally cool. Remember yesterday we were talking about how the markets had a great run up and took a break. Covered that in great detail all week last week. Well, now the markets sort of popped a little bit faster this week as well. And so I make the same comment. Hey, just take a break. Pull back a little bit even. Have some negative days in there. Let some fear come back into the market. Always a good thing because it gives the long-term investor a reason to buy. I want you to notice that the NASDAQ is still working on it here, moving back to these new highs. The NASDAQ 100 anyways, trying to push back to new highs. Same thing. Got a little too far, too fast. Take a little break. It's not extended extremely here, but we've got a reason for the markets to pull back. The Russell is sort of the warning sign and continues to be the warning sign. It is the only major index at the moment, not currently in an uptrend, right? It's currently flat. I would say this isn't technically a downtrend at the moment, but it's pretty much flat. That's not a good thing, right? When the Russell's not participating, that's not a good thing here. Now, here's the question I've been getting a lot. I'm just going to be honest with you guys, tell you how it goes. I've been getting the question. We do a lot of phone calls. You can schedule calls on the website, yada, yada. But people say, you know what, Dustin, the people that I'm working with now are not very good. I see that the S&P 500 hit new all-time highs, but my portfolio has not hit all-time highs. And that would be a real easy time for any advisor to say, well, come on over. Move your account here. We'll do a good job for you. But to be honest with you, some of our portfolios have not hit all-time highs yet either. The difference is we know why. So I can teach you why and what's really going on. I'm going to share that with everybody here today. So you look at your 401k. Maybe you have an account somewhere else. Maybe you're managing your own account. You look at that this week and you go, I see the excitement. We hit new highs. Holy cow, why am I not hitting new highs in my account? Well, there's a really, really good explanation for that. And the problem here is only the defensive areas of the market have hit those new highs or continue to be in an uptrend, doing really well. Let's take a look here, and that's going to kind of be my focus today for you guys. You've got consumer staples, right? Consumer staples, those are your product. That's your Coke, your tobacco, the things you're going to buy regardless of what the economy does. Look at how strong that rally is, right? Sitting near all-time highs. Well, consumer staples is not a very large chunk of the overall S&P or any other index for that matter. So we run into this issue where if only one area is moving, right? Even if you're invested in a broad-based sort of an index fund that offers multiple indices, you find that you're trailing a little bit, right? And that's because consumer staples, they're doing their job. They're at new highs. Everything's good. Healthcare. You got healthcare hitting new highs. Believe it or not, they're doing okay. We've been kind of tracking this breakout here for you to show you, but healthcare is doing okay. Okay, that's another piece of the market, one of the 11 sectors of the market. So, all right, that's pretty cool. You look at utilities and you go, okay, utilities, they're sitting at new highs. Everything's good. A little down day today, but not a big deal. Utilities, 3 areas of the market that are helping you out, hitting new all-time highs. If you were invested in only those 3 areas in your 401k or 403b, whatever, you should be at all-time highs, right? If you find that you're not, now we've got a problem. So here we go. We've got 3 areas of the market. And REITs. We got to cover REITs real quick. So REITs also sitting at all-time highs. And so that looks very impressive. The defensive areas of the market, besides them, have really sort of been the ones that did well. They've led the way on the way up here. Your other side to that coin is the cyclicals, right? The stocks that tend to move with the ebbs and flows of the overall market. So I'll point out communication services has not made new highs. This is a big one. There's a lot of tech names in this space, in this category here, or sector, that have yet to make new highs. They're dragging behind. And so a lot of you that are in growth portfolios, growth funds in your 401ks, you're noticing a little bit, right? Just a little bit of a drag. It's not horrible. They're catching up little by little, but that's holding you back just a little bit. Your industrials. All the industrials, they're still working on breaking to new highs. It looks like they're getting there. That's the good news, but they haven't got there yet. And so you see the media running with the headlines, S&P new highs, oh my God, celebration, party hats, confetti everywhere. But you're not there yet. So don't discourage, don't get frustrated with your 401k company. I'm happy to work with you, right? So I'll take the call, but I'm not going to be dishonest with you and say we can do that much better. That's just the way the market's moving at the moment. And tech stocks, right? So tech stocks, they're almost there, but they haven't quite made new highs yet. So you've got this little drag on your portfolio, which will work itself out. If you happen to be in any sort of Russell 2000 investments, small cap stocks, those are also dragging. Historically, they're going to outperform. They will outperform. It's just a moment where they're not. So I wouldn't worry too much there. Energy also, while it had a really good week, right, because of Iran and whatever was really going on there, had a great week. But overall, it is the only sector it's the second sector that is still in a downtrend, right? So, no, it's the only sector in a downtrend. I mentioned the Russell being the only index in a downtrend. Sorry to confuse you there. The energy sector is the only sector in the S&P 500 technically in a downtrend. And so if you have a lot of energy exposure, which not a lot of people usually do, but some people are really into it. So if you have a lot of energy exposure, then you run into that issue there. You run into the issue of having a portfolio that's sort of dragging on you a little bit there. And that's okay, right? So not a big deal there, all right? So that's the main issue there that I kind of wanted to focus on as far as you looking at your 401k. I just keep getting those calls. I'm getting those calls and the Bitcoin calls where people go, you seeing this? Look what's going on. I'm seeing it. Trust me, I see it. But just wanted to point that out. Now, here's the problem with that. Your lesson of the day, right? We mentioned the sectors that are doing really well. You may have consumer staples. Problem is, it's a little overbought in the short term. Utilities, doing really well. It's a little overbought in the short term. Not by much, but just a little bit. Healthcare, doing really well. Overbought in the short term, right? So what happens there? Think about that. If those sectors are leading the S&P higher, which is sort of odd, right? They're leading the markets higher. What happens if those sectors, which are overbought in the short term, take a little break next week? Well, we don't have the support of every other sector. We've got energy trying, right? We've got communication services trying, industrials trying, but we don't have that support yet. So all of a sudden, you sort of paint a picture for the markets being able to take a little bit of a break, which, is that a good thing or a bad thing? It's actually a good thing. If we go to the S&P 500, it leads me back to my initial comment today. If the markets took a break or pulled back, it would actually be a good thing. So Short answer there is I'm starting to try to wrap your mind around the idea of the markets pulling back. There's actually a lot of sort of negative data out there, so it's just little by little you kind of paint that picture. If the markets pull back, I'm cool with it. That's okay. I understand why now. I understand why maybe parts of my investments aren't performing. I understand why the markets may pull back or just simply go sideways next week. However, with the G20 meeting, especially towards the end of the week, I don't think you're going to see a sideways market next week. So maybe not the week you want to miss any updates or wherever you get your market updates from. All right, S&P 500, you got 67% of the S&P 500 above this blue line. It's just a fancy way of saying that 67% of this entire index is above the 50-day moving average, trying to continue or currently in an uptrend. The rest of the S&P 500 is weak. You now know, you could probably guess where those areas are that are weak without trying too hard, right? So that's that one. Financials, which are mainly a lot of the REITs, right? Financials, I'm hesitant to pull this one up, but this is a financial ETF. This is not indicative of the category here. Let's just do it like this. We'll look at FREL. So this is your leader, right? It's in the financial sector, but it's technically the REITs that are in this space here. They're your best performer. They have the number one spot. They're losing traction, though, and a lot of that happened because of today. Interest rates went a little bit higher. That hurts real estate in the short term. Technology's in third place. Like I said, it's lagging behind, but it's catching up, right? So it's not like it's lagging behind and we're worried, like the Russell. That's lagging behind and we're kind of worried that it's lagging behind. This is lagging behind. It's just not performing as fast as the rest of the market. So you don't really worry too much about that. The S&P 500, today you got 44 new 52-week highs. A lot of the insurance names, Aflac, was a 52-week high today, pulled back off those highs. Travelers Insurance, you just all in that category. Those guys hit new 52-week highs, then they pulled back a little bit. You got two new 52-week lows, and it's Kroger. Kroger reversed course and basically continued the weakness from yesterday. So again, hitting 52-week highs. Sector-wise, well, looking sort of zooming into the market a little bit, the dollar. UUP is the symbol if you like to track the U.S. dollar. Since the Fed meeting, it has had a horrible 3-day stretch. In fact, it's the worst 3-day stretch in over 13 months for the U.S. dollar. Gives you an idea of just, it's a pretty aggressive pullback over the last few days. And so, you know, maybe that's interesting to you. Gold headed a little bit higher here today. Very extended in the short term. Getting a lot of questions on this one. Is now the right time to buy gold? If you like paying top dollar for stuff in hopes that it goes higher, you're okay. You've got an argument there. If you look at something and you say, well, look, I just missed it, right? It's a great move. It's very extended, more than 2 standard deviations away from the 20-day moving average. If you're really geeky, then you go, maybe I'll wait. Let me see about a little bit of a pullback. It is trying to break out of that long 3-year range that we were talking about yesterday. So that's a good thing, but it's going to be a hard argument to get people to want to pay top dollar for gold, at least in the short term. We'll see what happens there. So, like I said, rates went a little bit higher today, so you see your bond prices headed a little bit lower. That's fine, I think. We're still inverted on that 10-year 3-month. 10-year 3-month. Did I say that right? Still inverted, 22 days on that one. You know the stats now on that. I'll cover that again on Monday, just see where we land on that one. But because interest rates headed a little higher today, it hurt the home builders. So you got a little bit of weakness there, down 1.2%. So you can understand that weakness. It hurt the REITs. We talked about that. You can look at that in really any way you like to look at that. And utilities, just a little bit of pressure on the utilities, though. Remember, as interest rates were sort of having their little fits and starts there, where rates were spiking up temporarily, utilities didn't care. It just basically went sideways. There was no pullback at all. A lot of times people say utilities get hurt on higher interest rates. That's true, but we're talking about a very minor difference in interest rates. So investors totally content to stick with the utilities, especially with a lot of the unknown out there, you know. So that's that one there. As far as individual stocks, let's do a few of those. Do you like your pot stocks? Do you? You got Canopy Growth today down 8%, slowing sales. Yeah, pot's recreational. We can use it in Canada. Oh, that's awesome. But these guys aren't selling as much as everybody hoped, and they don't make a profit. So you're now investing in a company. You got excited. You bought a company that doesn't make a profit. They lose money. And now they're not selling as much as you thought they were going to sell. So in turn, they reported earnings. They had a loss that was much more than expected. Let me give it to you. They lost 98 cents a share versus 32 cents a share. So they were expected to have a loss. They lost 3 times more than what was expected there. Not good. And they also commented on sales being slow, so that doesn't help. Didn't really hurt some of the other ones, though. If you follow like Tilray, they had a pretty good day. 1.5% coming out of this long downtrend here. If you're a technical type person, that's attractive, right? The company itself is still ridiculous, but it's attractive. And remember, their biggest shareholder, 75 million shares, has agreed to hold his shares and not sell them. Or lock them up officially. So you had that going on. You got CarMax in the news. KMX is the symbol, hit new highs there, up 3%. They beat on earnings by, I believe it was 10 cents, to be honest. It was a pretty good beat, and they beat on revenues as well. They didn't offer any guidance that I'm aware of, so basically investors just had those numbers to focus on. Good 3% gain there, so even if you happen to notice that people are getting more and more behind on their auto loans, doesn't seem to be affecting CarMax. They're still out there buying those cars. Merck, I put it in the scroller below. Price target raised on this one. That's about as much information as you're going to get out of me for Merck. I don't follow these biotechs that much. I'm just not that interested in them. I don't know. I don't like them. Price target of 95, if that helps you. Tesla, they also had a price target adjustment today. I typed it in there wrong. Tesla, there you go. There you go. Price target down to 300 for Tesla. By the way, they were at 400, so they were way up here. Brought it down to 300, so they're still bullish. They're just not as bullish on Tesla. Hope that helps. UNH is buying somebody. I forget who it was. Equian. And PayPal lost their COO. So a little bit of a down move on that. All right, sector-wise, if you look over off here to the right, look, it's just pretty much a little bit of a weakness, little down day there. It does bug me that the Russell wasn't as strong, so something that may bug you too. I don't know. It's up to you. You decide on that one. If you have any questions, I'm happy to answer those questions. I believe I have officially covered everything I want to cover, so I'm happy to help you with any questions if you have there. Enrique says, Kern is your new favorite stock. Really? I'm guessing you made some sort of nice profit on that, and that's why there. You're playing with fire. I got you there. I could see why you're happy if you had good timing on that one, but I don't know anything about the company, to be honest with you. I wouldn't, haven't followed it. Not interested. Yep. You got it. No, I don't think he might have a speech next week, but the next rate decision is end of July, so you got a little time there. But I'm with you. If he is speaking next week, that's 10 times too many. Will China affect Nike's earnings next week? It'll be good to find out like what they're doing about that. I think any of the price adjustments that are actually baked in at this point. So you can look and see what every analyst is thinking, what adjustments they think they're making. If it's some sort of wide margin that they're off by, yeah, it could be a problem. Nike's not historically a large gapping stock, meaning like it can gap up or down on earnings, but it's not typically one where you're shocked by it. Let me see if I can pull it up real quick to help you out. But we'll see. It'll definitely be in the focus there. Let me see. See, the average gap for Nike is less than 1%. Yep. So it's a pretty low volatile stock on earnings day. This time could be different, of course, but at least you know that. Like if you own it, you don't have to really freak out, and worry about that. Sorry if I missed a couple of them there. You sell Apple into earnings and you buy Tesla into their report. I got good. I don't know. I can't really say on that one. What are your feelings in the renewable energy market? Do you like renewable companies and more of the R&D side or more? It's like side topic a little bit. The socially responsible investing is making a real push where they're really trying to get investors. I don't know why, by the way. They're really trying to get you to focus on that. And what they're trying to do is prove to you that if you are socially responsible and environmentally responsible with your investments, that you're not sacrificing return. And where they've had to do is put a lot of these renewable energy companies in there that are really like micro cap type companies. They've had to sneak those in there for performance. That's a little dangerous. That's kind of like when the 401k or the target date companies were going like 98% stocks for someone that had 10 years or 5 years left to retire. It's a little aggressive. I worry about that. I'm not educated enough to say that those positions won't perform. I don't study them enough. But that bugs me a little bit because you're essentially saying renewable energy is great. I mean, I don't have a problem with that area, but you're essentially saying I'll take an extreme amount of volatility just to be socially responsible. Is there another way we can do it? So it's like they're really figuring. It's sort of like on the beginning stages here. They'll figure it out. We'll get it dialed in, but right now it's a little bit wild. And so that's the only real exposure I have to that. Investing lump sum versus dollar cost averaging into an index fund, whatever the investment is, doesn't matter to me. It's got to don't pick an index fund because you read a book and it told you to pick an index fund. Period. Right? Like, find the right investments for you. I get it. It's easy. You pick an index fund, you walk away, everything's fine. But are you missing out? Or are you investing too aggressive? It's sort of become a little pet peeve of mine. But either way, you dollar cost average, absolutely. And do it weekly if you can. We've done classes, we've done studies on that weekly beats the bigger monthly deposit, even though I know there's more weeks than, I know how it divides. We factored that in. Somebody commented on that. like really? So weekly versus monthly, you end up with a slight advantage in the end. And it doesn't cost you anything to have that slight advantage, so go for it. Yep. The question there. Why are you unable to give stock recommendations, but Kramer can? Yeah, we covered this yesterday. He's not a licensed financial advisor. He's not running a hedge fund. He is a commentator, a very good one. I'm not bad-mouthing him, but he's not in any sort of position where he's licensed, right? So he gave up all that to then go and do the shows he does. So if I were not, and I were just some random person on YouTube or wherever, then I could. But they're very particular. The rule is, if I make a recommendation, my job as a financial advisor is I'm supposed to know that recommendation is suitable for you. And because I can't see all of you and I don't know all of you, I can't make a specific recommendation. To my customers in our Thursday class, absolutely. I have a good time with that. We can say whatever, because I know each person, You can't transfer 401k. Yeah, it's very rare. Maybe someone asked that question and you were helping us out there. It's very rare. I've done one this year where the person was able to do that. There was no match. So that's a big part of it. If you have a company match, you can just pretty much guarantee they're not going to let you. Yep. Where can you get one of those shirts? Oh, they're hanging up right over there. and there's coffee cups there too. Got a lot of coffee cups. How do you dollar cost average on a weekly basis with ETFs? I'm not sure the question. You mean like how do you actually do it? ETFs you can buy and sell at any time, really, even before and after the markets are open. So you just buy it? Now, maybe you're asking, how do you do that and avoid like the cost? If the cost is an issue, you got to take that in consideration. Take a look and see what you're spending, shop around, see if you can find out a way to buy for free or cheaper. A lot of brokerage firms have commission-free ETFs. We don't have any commissions here, so we can buy. There's a handful of customers that invest daily. I didn't tell them to do that. They just do it daily, and it's just a tiny little amount, but it goes in every day. There's no cost for that, or you want to make sure you look at the cost before you do anything. FINRA, yeah, there you go. Harry's on the right page there. Could it be potentially profitable to do a pairs trade on SPY and VOO? No, they're not the same thing. You would not want to do that. Don't do that. Who won the $100? I said it at the beginning there. Your $100 winner, and the guess, by the way. So it was Robert L. guessed $26,678 and 24. That was his guess. Ram is asking, should I live in the U.S. to open an account? No, if it's a retirement account, you just either have to be a U.S. citizen. You can live overseas, but you have to be at least a U.S. citizen or a resident alien. Those aren't my rules. Those are the IRS rules there. So an ITN number, just if you have earned income here in the States, even if you live elsewhere. We have a lot of customers that live all over the place, but they are U.S. citizens or just temporarily based overseas for military or whatever. But can you buy partial ETFs? That depends on your brokerage firm. So we do the partial shares here. Financial Investor can help me out a little bit. I think M1 does the partial shares as well. I don't think like Fidelity does. And you got to look at the brokerage firm. Some of them do partial shares. We do just because we have a lot of smaller customers that are just getting started. So that really is very helpful, down to the 10,000th of a share. So it really helps you stay diversified right away. Yep. Oh, thanks. Yep, perfect. Would you recommend moving a thrift savings plan into a Roth that I can have actively trade within? I can't do anything with a TSP. Oh, Annette, that's a tough question. The TSP is the best account. All things considered, it is the best retirement account you can have. So it's very hard for me to say move it outside. Now, if you're the kind of person that says, I just like being active, I want to be active, and you have the availability to do that, really no one can stop you. I would just say you got a good thing there. Could you consider opening an individual account somewhere to actively trade in and let the TSP simmer? That's the honest advice. I mean, like I said, I'll always give you the straight answer and not try to sell you on anything, but think about that for a moment. Could you just have an individual account, put some money in Robinhood, wherever, put a few dollars in there, actively trade, see if you're good at it, right? Test yourself for a little bit. Don't make any major decisions there because you're probably not talking about a small chunk of money, and compare it. If you find that you're beating your TSP, okay, now you've got a valid argument. You're good. You know what you're doing. You can make the change, but I feel bad even saying that, so just careful. With the Feds possibly lowering rates, do you think a recession is coming the next year or two? It is actually it's 100% guarantee if they cut rates, by odds, not my opinion. If you look back in history, if they cut rates in July, it is 100% of the time the market is lower after a year. Went over those odds and showed the history with all of our customers. It's in 2 weeks ago we did our portfolio update. It's in that class. So you don't want the Fed to cut rates. The markets move higher in the short term, but if you go out a year, 6 months, 3 months even, it's not pretty. It's not pretty. How do the Fed fund rate, how does it impact mortgage rates? Eventually it does. However, that's not mortgage rates. I did a video on this a while ago. I probably could do it again to explain what does it actually mean when the Fed cuts rates or raises rates. Just to make it clear. Do you agree that silver generally lags gold's move? I don't have any data to say that. I don't think that they are. That's a good study, though. I don't have anything that says that there is a consistent lagging correlation, I guess would be a way to say it. So I wouldn't be able to say. Yep. Buying 2 at-the-money calls is like buying 100 shares of stock because of the delta. Yeah, if it's right at 50, if you happen to catch it right on the dot, you got it. Oh, you're probably referring to the video we did last week. Yeah, you're right. Nailed it. Nailed it. Sorry, your name and profile is blank. We'll just call you No problem. Hey, well, I think that about does the trick. Would you do me a favor? No, nothing else to ask of you today. Do you think this show is too long? Should it be this long? Or should it be shorter? Little heads up there. That'd be great. Leave a comment. I don't care what the answer is, but let me know. Leave a comment in the thing below. And you guys have a great rest of your day and have a great, safe weekend. Stay cool because it's hot. And we'll talk to you next week. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.